At the start of the year, markets were expecting up to 2 Fed rate cuts in 2026, but inflation has remained sticky, hovering near 3%, while the labor market continues to show resilience. As a result, the Fed has returned to its familiar wait-and-see stance, and expectations for rate cuts have gradually been pushed further out. Which brings us to the key question: when could the first rate cut in 2026 actually take place? This week's Nonfarm Payrolls report may provide further clues. The report will be released on 6 March at 4:30 p.m. GMT+3. Stay with me as I break down what the data could mean for markets and how to trade around it. Before I break down the upcoming jobs report, make sure you subscribe to our channel and turn on notifications so you don't miss out on any market updates and insights. Looking back at last month's NFP release, January showed resilient job figures, with the non-farm payrolls adding 130,000 new jobs. The job growth has significantly exceeded the forecast, while the unemployment rate ticked down from 4.4% to 4.3%. The wage growth, on the other hand, was also stronger than the market expectations, with average hourly earnings increasing by 0.4% month-on-month and 3.7% year-on-year. The US dollar, gold prices, and the 3 major US stock indexes were boosted by the strong NFP report. Conversely, the oil prices slightly ticked down on the geopolitical tensions. To trade around the NFP release, you've got to watch the forecast numbers. Comparing these forecasts to the actual data gives you a clear picture of where Forex, commodities, and stocks could move. February NFP is expected to show 70,000 new jobs, while the unemployment rate is projected to remain at 4.3%. Wage growth is also expected to be slightly down, with average hourly earnings rising 0.3% month-on-month and 3.6% year-on-year. So how could the market react to the NFP report, and what should traders watch out for as volatility kicks in? In a moment, I'll break down 3 key assets: the dollar index, gold, and S&P 500. So stick around for the full technical analysis. Let's start with the US dollar index. The DXY has recently rebounded to the 98 level amid the Middle East conflict. If the NFP report exceeds market expectations, the dollar could strengthen further and move toward the 99 level and testing resistance at 99.49 and 99.95. Conversely, a weaker than expected report may weigh on the dollar, pulling it down towards support at 96.49 and 96.02. Now let's look at gold. XAUUSD has also rallied on heightened safe haven demand driven by geopolitical tensions. If the jobs report falls short of forecasts, gold may extend its gains and approach key resistance between $5,599 and $5,738. On the other hand, a stronger than expected NFP could pressure gold and bring the prices down to support at $5,000 and $4,858. And now the S&P 500 index. The index has softened amid the Middle East conflict. A stronger than expected jobs report could lift the S&P toward resistance at 6866 or 6901. Conversely, a weaker reading may drag the index lower towards 6683 or 6640. That's the full breakdown. Remember, this is just my perspective on the market and not financial advice. If you find this useful, let me know in the comments. Hit the like button, share it with someone who needs to see it. And don't forget to subscribe with notifications on so you don't miss the next market updates.